Welcome back, everyone, from the Wall Street Silver community. We have a very special guest with us. Today, we have the CEO and founder of First Majestic Silver, Keith Neumeyer. Keith, how are you doing today, sir?
Great, Ivan. Nice to meet all of you. I've seen all of you on the internet for the last few months, talking about the silver squeeze and all the exciting things happening in the silver market. So it's great to see all of you today.
Well, it's a pleasure to have you on, sir. We also have Jim Lewis and Lee Justo from the Wall Street Silver community. We're going to get right into it, Keith, and ask you some questions. Jim, Lee, who wants to start?
I'll go first. Keith, thanks for coming on. We really appreciate it. You're very well known on Wall Street Silver. Everyone mentions you with a great deal of respect, primarily because you've spoken in the past about, the pricing of silver being not priced correctly for the amount of effort that goes into producing it. And in the past, your own company has, at times, withheld silver from the market. And recently, one of your peer mining companies, Endeavor, they've also done the same, sort of copying something you've done in the past. And I'm wondering, is this a new trend that you see possibly happening among other producers of silver, miners?
I'm hoping so. I've been asking for that among the executives in the space for, going back 5 years. And I've said quite clearly to a number of executives that we should pick a month. I like the month of June because, if you go back 30 years, June tends to be the low in the precious metals pricing market or the market for whatever reason. It's just a seasonality thing, but it's not always that way. But something like 90% of the time, gold and silver hit lows in June, and I figured let's pick June as a month where we just all together hold back our ounces and work as a team and try to cut off supply to these banks and to really see what would happen. But it's nice to see Endeavor getting involved in that. We've done it a few times ourselves. I was really happy to see that news.
How do your accountants feel about that when you when you hold ounces off the
market? They don't like it. I can tell you. It's we're in the process of building our inventories up in our physical or in our retail products, as you can see in the photograph behind me. Last year we got wiped out. And the sales just continually come in. I'm surprised because last time this happened back in, really about 2010, 2011, when we saw a huge spike in sales from our retail division, it didn't last that long. It went for maybe 6 or 10 months or something out of memory. But this has been going on consistently now for close to a year. And it's exciting because there's a new buyer that's come into this market for sure. These aren't your normal, buyers that were in the market 2-3 years ago, and they want physical. And we're restricting the supply to limited quantities per customer per order, just because we're trying to get as much silver out to as many people as possible, rather than just allowing 1 or 2, big groups to come in and just wipe us out. So. But we're scrambling to build up our inventories. And, to your question, the accountants hate it. Well, look, I'm a bit of a unique guy, right? Like, I'm not a geologist. I'm not an engineer. I'm not an accountant. I think differently. I worked for the banks in the 80s. I worked for 3 of the largest Canadian national banks from 1984 to 1989. Before I got into the public side of things, I'm working for publicly traded companies and then building publicly trading companies, and from 91 and to date. So I come at this, from quite a different viewpoint, and and it's no knock against geologists or engineers or accountants. I have many working for me, and we need them. They're critical components within the mining sector. But they don't, in my opinion, anyways, really understand what we're pulling out of the ground. We're pulling a strategic metal, silver, out of the ground that's critical for the human race to accomplish the things that we accomplish on a daily basis. I think sometimes these professionals work within a box that they're comfortable with, and I'm the one that kind of pushes them to think a little bit sometimes outside the box.
I recently became a customer of yours. I got to disclose this for full disclosure. I bought 5 of these back in January, right when I was trying to buy some silver online real fast at the end of January because everything was disappearing out of the retail stores. And
Mm-hmm.
I recalled someone had mentioned online somewhere, well, hey, you can buy direct. The only mining company out there that sells their own retail bars is First Majestic.
That's
And I
cool.
got this beautiful one right here for 10 ounces from you guys. And I bought 5 of them right before you raised the prices again. You were like raising them 28, then 30,
Yeah.
then 33. And I recalled an interview you had where you were saying, man, this was just sort of something we did on the side. And all of a sudden now we got millions of dollars of sales out of your retail store. So, I love this bar. It's beautiful, by the way.
Yeah, we've been doing it for over 10 years now, and it all started just innocently to where, we had shareholders asking for coinage, and and we started making them, and then lo and behold, we started people asking to buy them, and and then we created the e-commerce store, and today it's reasonable business. It's making money, not a lot, because we don't really do it to make a money or make a profit, but we do it really just to supply metal to people that are interested in buying it. But it's getting quite interesting. We're now taking it a lot more seriously. We're actually building the department out right now. Where we're adding a couple of people in that department, and we hope to see some additional sales over time. And my one of my favorite products is this cube. There's each one of these cubes. There's 17 of them in this little thing here, and each one is 10 grams. So there's about 8.5 ounces in this thing, and it's so fun to play with. We do this. So I'm not sure you can see this, but
oh wow!
Yeah.
So do they clink? Do they clink correctly when you?
Oh yeah.
Oh yeah, they do.
They sound great. I love playing with them. So that's my personal favorite product. But look, the 1 ounce coins are always nice to have as well. But no, I just my point about the critical nature of this metal. This is not silver is not the poor man's gold, as the banks like to call it. And silver is not gold. Gold is money. Silver is a strategic asset, strategic commodity that is required as part of the whole economic cycle. If we're going to continually get off oil and gas, as the governments are wanting us to do, which that ball's rolling, we're going to need a lot more silver, and the miners just simply are not producing it. And in order to incentivize the miners to spend the capital necessary to produce the needs of the planet, we're going to need to have much higher silver prices.
Mm-hmm. Ali?
Yeah, can with that said, can we get into what you think of the theory of price manipulation in the COMEX? We obviously have had this huge spread between spot price and physical silver at retail. How do you see that being caused, and how do you think we can get beyond that and get into like more of a realistic price in the spot market?
Yeah, it's a whole debate, right? I looked at we're a member of the Silver Institute, and I looked at their 2020 report, which was just published, I guess last week, and I think I have 50 copies of it in my office, and I'm going to throw them all in the garbage, quite frankly, because the data is nonsense, and you've got GFMS, which is the largest data collection company on the planet. It used to be owned by Reuters, then got bought by BlackRock. BlackRock runs GLD and the SLV, and they own the data collection service that is one of the most respected data collection service on the planet, that all the banks around the world rely on for the supply demand fundamentals in the metal, which in itself is a joke. And you look at the data that these groups publish, and there's only 3 groups. There's GFMS out of London. There's Market Focus. No, what's it called? I forget what it's called. and they're another one out of London, and then the other CPM group out of New York. And they're all the same. And the crazy thing is that, you know, they could more or less tell what the miners are producing, you know, because a lot of that is public data. You know, they cannot tell what the consumption is. It's almost impossible, because I know for a fact through my own dealings that these big consumers do not want to tell you what they're consuming, because it's such a tight market that they're absolutely paranoid about people like us finding out how tight this market is. So they keep the whole demand side very confidential. The refineries are mostly privately owned. There's a few that's owned by public companies, but very, very few. Most of them are private families, high net worth groups that own these refineries around the world, and they don't tell you how much silver is coming in their door. And they don't publicly report, and they're actually paranoid about telling you what their numbers are. The recycling industry is a complete mystery, because all these computer electronics, and by the way, China doesn't import computer waste anymore as of January 1st, 2019, and that was the biggest consumer of computer waste on the planet, and those numbers weren't available. So we don't actually even know what the recycling market looks like. But we do know, or I personally know, I've invested in 3 recyclers. 2 are bankrupt. 1 is barely alive, because you just cannot recycle silver or gold out of a cell phone at current metal prices to make a profit. So the only real recycling that occurs is through hospital x-rays. In the United States, it's actually a fairly substantial number, but most of the hospitals are now converting over to electronic x-rays. They don't use the old film anymore. So that industry is slowly dying. The other recycling comes from silverware and things like that. But when silver spiked up to, you know, $50 in 2011, most of that old silverware was consumed. And so, you know, there's the view out there is that in order to bring that silverware back into the market, if there's any left out there, you would probably need $70+ silver to actually impact the recycling industry in any serious way. So recycling is pretty well dead. So really, where's the silver coming from, right? And then where's the consumption? You know, another thing I've noticed was in the public data, they use hedging as a supply number. So how does hedging, you know, come into the picture from a physical supply perspective? You know, it's a paper transaction. Yeah. So, but they contend that if a miner like First Majestic goes and sells 1 million ounces today for future delivery, that's somehow supply, right? I disagree with that. I don't think that's supply. That's a short position in the paper market. They disagree. So using that methodology, if you're an institution who takes a short position where you don't have the metal in the ground and you have to buy it back in the paper markets, would that not be demand, right? So the short position that currently exists in the physical market of somewhere between 300 to 400 million ounces, that should be on the demand side, but yet they don't include that. So, you know, the public data is completely skewed in favor of the banks. And I think that GFMS, CPM, and Metals Focus, I think is the other company I was trying to remember. I think they're just all using the same data. I think they're all in cahoots with each other, and they're all designed to dissuade people like us to invest in the metal.
So other than what JP Morgan was caught doing a few years ago, you don't think there's like an active campaign to short the paper market? You think it's just based on the data that's being presented out in the marketplace?
Well, that's a different question. So I work for three banks, and then I guess this is where it becomes slightly controversial, and this is where I kind of maybe am not part of the same um, uh, thinking process as some of the groups out there that say J.P. Morgan is the culprit. I don't know. I don't work for J.P. Morgan, and I read Ted Butler stuff. I read probably a lot of the same stuff you guys read, and it's good reading. But whether it's true or not, I have no clue. What I do know from my experience of working at banks is they don't like risk. Banks generally don't act as principal in a trade. It's very unusual for them to go, buy 1 million shares of Apple, and hold it on their books for a couple of months because they think they could flip it out, at some future date, right? They might buy 1 million shares of Apple if they know they can sell it in 3 seconds at a profit, but they're not going to hold it on their books for any length of period of time, right? And same with the whole argument with silver. I do believe, though, that there are clients behind J.P. Morgan, that J.P. Morgan's acting as the broker or the financial institution that is the main bank behind these transactions. Now, who that client is the big mystery.
I guess we could speculate on that one.
Yeah,
I have my own ideas on that.
Yeah, and I'm not disputing J.P. Morgan is the biggest trader in the precious metals market. We know that. That's factual. But who they're acting for is the big mystery.
Hey, I've heard you in recent interviews talk about peak silver, and I'd want to share a chart as we talk about this. Is this visible to everyone?
Yep.
Back in 2015 if you look at as you said, the production side is pretty well known because most of the miners are publicly traded companies, so we can get this data. Mm-hmm. And we peaked out right around, just below 900 million ounces in 2015. And I've seen numbers that it's a bell curve. As you find all the big mines, the easy deposits, production rises pretty easily. But all those big mines, the big easy deposits, have been mined out, and we're seeing production gradually decline. I wish I had a more updated chart. This one's from SRS Rocco, but it's I've seen other reports that it's fallen to as low as 800 million ounces as of last year.
The 2020 numbers was 748.
Wow, that low. But part of that's probably a little bit virus hiccup related with some. Sure. Yeah. So we might see some hiccups in terms of not a consistent decline.
2019 was 838, and 2020 was 748.
Wow.
Yeah. And I want to show another image that SRS Rocco has, and this one is sort of it sort of shows the problem, I believe, in that this is for primary silver mining companies, how gradually the ore grades have been in decline for the past 15 years. And I'm wondering, does this data from SRS Rocco does it match up with what you see? You're an expert. You're on top of this. Is this accurate?
Yeah, I'm just. I don't think of ounces per ton. I think of grams per ton. But being metric in my part of the world, but this is in line. It's grades have definitely dropped worldwide, and this is not just happening in the silver sector. This is happening in copper and gold. Throughout. All. The theory goes is all the easy stuff has been found, and then finding we just bought Jerritt Canyon gold mine in Nevada. We've we've been desperately looking for another great silver mine, and silver mines are just extremely difficult animals to find. You could buy a zinc mine with silver, but I don't want to become a zinc company, so to get a mine with north of 50% silver is just extremely difficult to do.
So you're finding you're becoming gradually a hybrid silver and gold producer with
A little bit. It's part of it's growth. Part of it's we need to bring growth to our shareholders and try to strengthen the business. And don't forget, mines are depleting assets. So there's a limit to the life of any mine. You go back and look at 2017, and First Majestic was producing from 7 mines.
Wow.
Today, as of yesterday, we're producing from 3 mines in Mexico. Nice to say though, all doré mines. And if you want to get into that discussion, those kinds of details, the difference between a doré producer and a concentrate producer, I'm happy to do that. But the Jerritt Canyon mine was added to our portfolio just today, closed today. So now we have a 4th mine, one in the state of Nevada. So we're looking around the planet for more silver mines. And Todd Anthony, my VP of corporate development, just told me yesterday that the 2020 ratio between gold and silver produced worldwide is now 7 to 1.
Wow.
It's the lowest I've ever seen it in my career. So for every 1 ounce of gold we're mining as an industry, we're only mining 7 ounces of gold. Yet, what are we trading at? Something like 70? No, for every 1 ounce of gold, 7 ounces of silver being mined.
Yeah, okay.
Yeah.
That makes total sense. A lot of people are shocked that we're still at 7. I mean, it reached 120 at one point last year.
Yeah.
But still 70 to 1, as you said, is incredibly high. So what you're seeing is, I look at all this data in terms of peak silver, declining production worldwide from the mining sector, and rising demand in solar panels or electric cars or consumer electronics. And then on top of that, investment demand for bars and coins for bullion. We talk with bullion CEOs, Andy Sheckman, or we just had an interview with SD Bullion, Tyler Wall, the other day. Their business has doubled in the past 12 months. All these guys. So when you mentioned the Silver Institute not showing that investment demand is skyrocketing, I think that's why some of these numbers you see from these official sources are just garbage. They're not reflecting what anyone who's involved in this can plainly see, is that investor demand is going through the roof, whether it's from just people worried about their currency with the governments going, print crazy on the dollar and the euro, or for whatever reasons, investment demand for coins and bars is going through the roof. And you've seen that in your own store. And I understand you guys are also doing something for the raid this weekend.
Yeah, that's right too. The May 1st is the 10-year anniversary of the silver hitting $50 back in 2011. It was actually that night it actually hit it on the Friday, but that night of May 1st was a Sunday night, and they dropped silver, by $6 overnight, and that was the beginning, the end of the silver squeeze at that point. Where the banks all collectively got together and decided they would smash the market during a holiday. Obviously an unfortunate event. So it's nice to bring that to everyone's attention. And also May 1st is an interesting time because that's when the Hunts also drove silver to, I think 49, close to $50 as well. So important dates, and we're happy to participate. We're putting a promo code out to, anyone listening to this, of course, but our database as well. We'll be getting an email sometime later today. And if you have a promo code, AGRAID, AG RAID, then you can get $1 off your purchase. But we're limiting sales to over 100 ounces per person because, we obviously don't want our inventory just being gobbled up by a small group of people.
I'll put that link in the description for anyone who wants to see it.
Yeah, we'll confirm that by email as well.
Now,
Gotcha.
Keith, can you share with us the importance of the board having skin in the game?
One of the things I do when I look at, you're talking about on the stock side of things, obviously.
Yes.
Yeah, what I'm fully invested in the mining sector and have been for almost 35 years, and I've learned a lot about what not to invest in, and what I've learned along the years is you always invest in people first, uh, and that goes beyond assets by a mile. You go for management teams that have got a track record of making investors money, because a lot of executive teams don't treat their investors' money as their own, and it's quite shocking actually. So when you look at a document that people should look at it's called a management circular, and I'm not quite sure the document is called in the United States, but most of these mining companies are listed in Canada anyways. And if you go to cedar.ca, SEDAR.ca, and type in the name of the company, you can go down and find the management circular. And you open that up and you look through it, and you see what the board of directors and what the senior management own in the business. And there's your skin in the game. So, often I see, where the CEO has nothing, no stock. And I'm thinking, like, why would I invest in a company, where the CEO has no stock? He might have stock options, or a decent salary, or maybe decent bonus structure. And there is some incentive, I gather, for him to bring success to the business. But unless you actually own shares and watch the ticker symbol on a regular basis and see, okay, what is it doing? What's the stock doing? Well, if I make a move, what does the stock do? And you actually begin to care about what the stock does. And you see the effect of what you do on a daily basis and how that affects the market value of your shares. And if you don't have that connection with the investor on the street, then why would you ever invest in that company? And I just look at that as my first go-to. And if those numbers are too low, I just walk away. I don't care how good the story is. I don't care, unless someone says, unless they're approaching me to take over the business, then maybe the company's bankrupt and it's got a good asset in his portfolio. And I've done this before. That's how I built First Mining Gold, for example. I did eight acquisitions in a period of 15 months when I built First Mining Gold, from early 2015 to mid 2016, and those were all basically bankrupt companies with great ounces in the ground, but the management teams couldn't raise a penny if they tried. So I went in there and just gobbled up all those companies and built that company. So there are unique situations, but for the most part, for your average retail investor, you got to go to management first.
That was perfect.
Keith, you've spoken, Keith, in the past about monetary reset, and I heard your comment about a digital currency and tracking all of our spending, and I just find myself agreeing with your comments when I heard them. And I was wondering if you could share that with our audience also about the dangers of the government tracking all your spending with a digital, central bank sourced currency.
Yeah, it's a bit of a slippery slope, isn't it? Governments have trying to figure out a way to get rid of paper currency for quite some time. Going back a decade at least. The 500 euro note, you can't get them anymore. It used to be a very common note. It was the European Union's largest note. They reduced that now to 100 euros. There's been talk about eliminating the $100 US bill, and a variety of other, and this is all just part of that process where, governments are suggesting that, somehow, if we're using paper money, which mind you is fiat money, but nevertheless, it's our main source of trade, paper money, that somehow those bad guys on the street that are somehow money laundering or whatever the case may be, they can shut all them down. But we all know that I guess that does occur, but it's such a small component of paper transactions. It's not something that really the government should be really that concerned with, because the banking system is pretty strict where they should be able to, catch a lot of that money laundering that's going on, right? So, but yet they create that as the main story for their purpose of reducing paper in our pocket. But that's not really the reason why they're doing it. That's just the headlines. They're doing it because they want to monitor, how we spend money, and of course for tax collection because they want their piece of the puzzle. And if you go and sell a used lawnmower that you've had for a couple of years because you want to go buy another one, your neighbor wants to buy that lawnmower from you, and he gives you $100 for it, that should be a private transaction between two people, and it's a private thing. There's taxes been paid on that lawnmower already when it was bought new. Why would you have to pay taxes on it a second time? Mm-hmm. And why would the government need to know that you just sold your used lawnmower to your neighbor? It makes no sense. And yet they do think it makes sense. They want to be able to track all this stuff. And if you tend to go to the bar too often, or whether you tend to do buy cannabis products, or whatever the case may be, they want to be able to put you in a box. This individual is this type of individual, and we know what his behavior is like. We know blah 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 blah, and it's just too much. And in my opinion, government should not know as much as they're trying to know about people. People should be free to do what they want as long as they act within the laws, and don't treat other people in bad ways. And I'm a libertarian at heart, and and governments are tending to move into this very socialistic type of system whereby they're just taking more and more controls away from us, and it's quite shocking to see what's happening on the planet. It's not just the United States. It's all throughout Europe, and even in Canada, it's getting quite bad.
If they start doing those digital cryptocurrency, a digital dollar where they're tracking it to that level and restricting that type of commerce, like you just described, I could see a scenario where things like this and coins, little 1 ounce coins, could start becoming the currency of the gray or the black market, just for people to have transactions without government interference.
Well, you see a lot of Hollywood movies, and Hollywood seems to always be very good at looking into the future. And there's lots of Hollywood movies. I can't think of anything off the top of my head. Like iRobot might be one, but there's several of them out there. But it kind of shows you kind of a direction that the big corps are trying to push government. Where they have this huge monopolies that are basically controlling the populace, and the government's just kind of are on side because the amount of dollars, I suppose, that are involved, and everyone's happy. And when a politician leaves politics, they get a job immediately with one of these big corporations, and it's just this circle whereby the rich get richer, and the middle class gets shrunk, and the poor get bigger.
Just quickly, the past year has got to have been one of the most interesting years for you. We had the whole COVID thing. Obviously, you're a fairly big company. You have a lot of families that are depending on you, and I know that you were kind of responsible for carrying those towns where your mines are through some pretty rough times. A lot of companies now are also having some logistic challenges. Do you see any of that stuff impacting your company and the mining industry in general in the next few years?
Well, look, I don't think the mining industry gets as much praise as it should, quite frankly. It's just the mining industry is a wonderful industry. It's people take for granted all the things we do every day that require mining. It's just the buildings around us, the gadgets we use on a daily basis, and all the stuff that the human race has been able to accomplish over the last 500 years. It's all got to do with mining, and the wealth that the mining sector has created in these towns. And I've built towns personally, well, not with my own hands, but with money that I've raised, and people I've hired have done this work. And in communities that were no one was there, and now there's 2,000-3,000 bustling communities with children in uniforms being bused from surrounding areas to junior schools and senior schools, and electrical infrastructure, water infrastructure, general stores, paved roads, you name it. And we currently have 4 mines shut down because of the economics of those particular mines, and we're still supporting those communities. We're still collecting garbage. We're still getting those kids to school every day. We're still supplying all the services, and we've got zero revenue coming from those 4 operations. To bleed to our financials, but it's something that I think is our responsibility. We ran those mines, we made a good profit on them, and hopefully one day they'll be up and running again in a more high-priced environment. And we're looking forward to getting them up and running. But I'm not sure if I answered your question, Lee. But
you have, and I just like to point out that this really illustrates the consequences of artificial price. If we had a real price, those towns would be profitable.
Yeah. That's a good point, Lee. I've said that a number of times. I'm glad you said that, because if the banks, and a lot of these guys are, out of college, university, they're in their 30s, they're MBAs, they're watching a ticker screen on their computers in New York, and they're used to a trading range of these commodities. And when they get to the high end of that trading range, they sell it. When they get to the low end of the trading range, they buy it. All it is just a number on a screen, and they don't actually realize that by them taking enormous short positions and depressing prices, not allowing prices to actually go to their natural levels, that they're actually hurting thousands and hundreds of thousands of people around the planet that otherwise would have clean water and would have access to food and schooling and education and so on and so forth. As it's quite shocking for me, and I do my best to try to help out as much as I can, but I feel like I'm a lone wolf sometimes.
Well, Keith, thank you very much. We'd love to have you back in the next few months as things develop and get an update from you. You have a lot of fans on Wall Street Silver for what you do and what you've done in the past, and let's keep it going, man.
Great. Well, I appreciate your time, and look forward to doing this again.